You know, when a country's economy hits a wall, how it responds can literally define its future for a whole generation. And that's exactly what we're looking at today. We're diving into how Bangladesh's central bank is navigating a perfect storm of economic problems with a seriously bold reform plan. So let's break down what's going on. Okay, so to really get a sense of just how big this challenge is, you just have to read this assessment from back in late 2024. I mean, we're not just talking about a few bad economic indicators here. The source actually uses the phrase institutional collapse. Wow, that paints a pretty stark picture, right? An economy teetering right on the brink. It really sets the stage for what is one of the biggest economic fights in the country's recent history.
So, just how deep did this crisis go? Well, the new government and the central bank, they didn't just inherit one problem. It was more like a whole cascade of failures, one after another. And it all started with the one thing that hits everybody right in the wallet.
Right, inflation. This was the most immediate pain point for, regular people. In July 2024, it hit a peak of a staggering 11.66%. That's a 10-year high. But what's really wild is when you see it next to the government's target, which was 6.5%. So the reality? It was almost double the goal. That just completely erodes people's savings and makes everyday life unbelievably expensive.
And yeah, it wasn't just inflation. The entire economic dashboard was basically a sea of flashing red lights. GDP growth, it slowed to its lowest point in years. The country's safety net, its foreign exchange reserves, they were just draining away. And the banking sector? Oh boy, it was drowning under a mountain of bad loans, what they call non-performing loans, or NPLs. And these are so dangerous because they basically clog up the whole system and stop money from flowing to good, healthy businesses. To top it all off, there was a massive liquidity crunch, which means cash got so tight that even the banks were having trouble lending anything out.
So, faced with this absolute perfect storm, the central bank knew that just patching up the leaks wasn't going to cut it. Instead, they launched this decisive three-pronged attack. A real fundamental overhaul designed to stabilize the ship and, hopefully, bring back some confidence. And here's their game plan, laid out perfectly. First up, they slammed the brakes hard on inflation, with a tight monetary policy, keeping that key interest rate parked at a high 10%. Second, they did something huge. They moved to a flexible exchange rate. That means letting the market, not the government, decide the currency's value, which is a big deal for absorbing shocks and building back up those foreign reserves. And third, they went straight to the heart of the problem, with wide-ranging, major reforms in the banking sector. So, the million-dollar question is, did it work? Was all that painful medicine worth it? Well, the early data suggests it's starting to have an effect. Let's take a look at the first signs of what might just be a pretty remarkable turnaround.
First, let's talk inflation. And the results here are pretty dramatic. By June 2025, that scary peak of over 11% was down to 8.48%. Now, that is a huge milestone. For millions of people, it meant that crushing pressure of rising prices was finally starting to let up a bit.
Next up, the country's financial safety net, it started to get stronger. Those foreign exchange reserves that were dangerously low, well, they climbed from about $21.7 billion up to a much healthier $26.7 billion by June 2025. That's a really critical signal that confidence is starting to come back.
And this might be the most impressive turnaround of them all. Check this out. The balance of payments, which is basically the country's total financial scorecard with the rest of the world, it went from a $4.3 billion deficit to a $3.39 billion surplus. That is a massive swing, and it was powered by two key things: record-breaking money sent home from Bangladeshis working overseas, and really strong export growth.
So, while all those big headline numbers are looking better, the toughest battle is actually happening behind the scenes, deep inside the financial system. Let's dig into how they're tackling the really deep-rooted problems in the banking sector.
Okay, the centerpiece of this whole reform effort is a powerful new law, the Bank Resolution Ordinance of 2025. What does that mean? Well, in simple terms, it gives the central bank the legal muscle, the teeth it needs to handle failing banks without setting off a huge, system-wide panic. It means they can step in, protect people's deposits, and use modern tools like bridge banks to manage a crisis without everything falling apart.
Now, to actually get this massive cleanup done, they've created 3 specialized task forces. The first one is all about strengthening the rules and really digging into the quality of the assets the banks are holding. The second one is focused inward, on reforming the central bank itself to make it a better watchdog.
And the third one, and this is so important, is an asset recovery team. Their job? To track down and bring back money that was illegally funneled out of the country. So you've got these positive signs on one side, and this huge reform effort on the other. It would be really tempting to just say, okay, problem solved, and declare victory. But, the reality is a lot more complicated. This recovery is still pretty fragile, and there are some really big challenges still looming out there. So let's take an honest look at the things, both external and internal, that could still derail this whole recovery. These are the headwinds that policymakers are, you can bet, keeping a very close eye on.
And believe me, these risks are serious. First, from the outside, there's the threat of new U.S. tariffs. That could really hurt Bangladesh's export engine, which has been so important for this turnaround. Then, back at home, the inflation fight isn't over. A weaker currency helps exports, but it also makes imports more expensive, which could push prices right back up. The banking system, well, even with all the reforms, it's still wrestling with that massive pile of bad loans. And finally, there's political uncertainty around the upcoming election, which always adds another layer of risk to the economy.
So, here's the bottom line. Bangladesh has managed to pull its economy back from the edge with a series of really bold, decisive, and let's be honest, painful reforms. And the first signs? They're definitely positive. But this journey is nowhere near over. The real question now is whether these new foundations they built are strong enough to handle the next economic storm. Because there's always another one on the horizon.